here at Champions Real Estate Team at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner, the second team leader at Champions Real Estate. So we jump on here every Wednesday over the lunch hour, try to get you caught up on the latest real estate news in the Omaha metro area. Joining me as always is Russ Williams with Williams Mortgage. He'll kind of jump in and talk a little bit about what's going on the rates and kind of what he's seeing. Some of the things that we've seen in the past, moving forward, kind of what the Feds are doing in that regards. But as always, let's jump straight into our graphics here as we look at it. So hope everyone had a great new year and a safe new year. And we're jumping right back into the real estate market as it's a year-round business. So it don't matter if it's 8 degrees outside right now. People are buying and selling and getting multiple offers and being competitive in the marketplace. So we got 287 new listings that went live over this last week. 151 new contracts, so pending houses, and 406 sold homes, closed homes on that side of it. So obviously that's up from a little bit from last year or last week. Last week we had 194 new listings, so up just about 100 listings, which is good. Get some more inventory out there. And I think right now we're gonna start seeing a lot more people, buyers and sellers, entering in the marketplace as it goes on. I know last year at this time, going into February, March, we had that huge Arctic blast and we had a lot of the weather basically, I think, set us back a little bit, about a month or so. So we were kind of a month behind. So obviously weather times and things like that, but still it's a great time to get out there, buy and sell. 30,000 foot view, the other graphic we kind of show. So we have the 1,329 active listings in the Omaha Metro, Omaha Lincoln MLS. Breaking it down in the Omaha Metro area, Douglas, Sarpy County, 677. So that's up a little bit from last week. Existing homes in that Douglas and Sarpy County, only 263 homes. So that's one of those things that when a house comes on, it's almost like one in, one out. So as houses are hitting the market, they're going pretty darn quick. New construction kind of hovering right around that 415, 430 range is kind of where we've kind of basically seen the whole year going through that. Months of inventory, just under a month of inventory. Average sold price hasn't changed too much over the last week. So still kind of hovering around that 293 with about a 10% increase in that from last year. So one thing I wanted to share with you as well is our trend graphics chart here. So this is basically the active, sold, and pendings kind of graph from September of 2020 to November. The data comes out the 10th of every month. So we're a little 5 days ahead of it. But looking at November, you can kind of see the swell going up and down, as it goes into last year. We had more houses in January, went down. February, March, like I said, we hit that kind of cold span, and we didn't really get ramping up until May, from when you look at the numbers of it, which, that's all dependent upon what the weather's doing. So looking down at the bottom here, kind of break it down into more numbers wise. So from this time last year, we were down 17% in listings, looking at this middle column here, if you can see my cursor. So we have, on this chart here, we had 1,225 active listings, and then comparative to 1,475 last year. So as we see, those numbers are still down. So being a seller, still a great time to sell. Get out ahead while you're not one of the many that start hitting the market in the next month or two. So if you can get your house ready to rock and roll, if we can sit down with you and go over what you need to do to get that house in that top dollar condition, even though it's a seller's market, buyers are still very picky, and they're not just going to spend their money on a house that needs a little bit of work, and that source. So if they're spending top dollar, they want a nice house, and maybe not have to do a lot of the work for it. So, but still a great time to buy and sell. So we'll jump in here with Russ and check in what's going on the mortgage rate. So how are we doing, Russ? Happy New Year.
Happy New Year, Mark. Haven't talked to you since last year. Ha, ha, ha.
Yeah, right.
Right. We are seeing a very active marketplace. People are looking into the new year, as we've talked about in many sessions we've had every week here. The Fed is going to be raising short-term rates this year. Right now, we're seeing interest rates that are at the highest levels that we've had since January, pretty much, of last year. January and March were very similar as far as interest rates go last year. And we expect that likely will continue here for a little while. And let me explain why that is. When we take a look at history, you'd mentioned the Fed earlier. We take a look at Arthur Burns and Paul Volcker, which were Fed governors back decades ago. We saw inflation jump from 7% to 14%, and mortgage rates at that time rose from 12% to 18%. For those older folks, maybe that are on this session and watch this video. At the same time, we saw the S&P, which is an investment, of course, drop by 30%. When we look at Alan Greenspan, inflation rose when he first came on board from 2% to 3.5%, which increased mortgage rates from 7 to around 8.5%. And around that same point in time, we went into a recession and the Dow dropped 50%. Now we, of course, have Jerome Powell. He's the current Fed governor. We've seen inflation climb from 2% where it was a couple of years ago. Now we're sitting close to 7%. Mortgage rates have risen, generally speaking, from 2.5% to about 3.375%. The question is this: what are our investments going to do? What is your 401k going to do? If history is any indicator, it's an expectation that these record levels in the stock market, as the Fed begins to move higher, could start to see some deterioration. We might see the S&P drop, which means your investment values might be affected as well. Mark, this is a great time for folks to maybe consider diversifying with real estate. We've talked about in previous sessions, Mark, that we have a tremendous demand out there with supply remaining very thin. You've gone through this every week for the viewers. This is a great time to get into real estate as an investment vehicle. Especially given that all forecasts are projecting rents nationwide to climb anywhere from on the low side 5% to well over 10% over the next 12 to 24 months. It's a great time to get into real estate, Mark.
Yeah, and with those rent increases, I mean, obviously that's a month to month that you're getting that almost like a dividend check when you talk about investments. And with that increase going up, but you're not also taking into account with potential appreciation of that property, your asset value goes up, and you don't have to put in $100,000 to buy a $100,000 house. You can put in $25,000 or $30,000 to buy that $100,000 house. So you can spread that out a little bit, increase that passive income stream for you over, from a month to month basis. And like I said, you don't got to diversify. Don't take everything obviously out of the stock market and things of that sort, but make that money work for you in a different light, which also has tax benefits and all that kind of fun stuff that goes along with the real estate investment side of it. So it's one of those things that, I was just having a conversation with my client, obviously as ages, we can't predict the future, don't have a crystal ball, but there's houses that are $200,000, $250,000 right now. And if they're in great shape, updated, new bones, as far as the furnace, air conditioner and stuff like that, say they go on the market today, $250,000, great house. If there's multiple offers, that may drive it up to $260,000. That closes in, February, March timeframe. When I get a listing in April and I'm looking to price that house, I'm going to look at that comp that sold it, let's say $260,000, $265,000, and price it accordingly in that manner. So that house you could have got today for $250,000, maybe going up. So from a real estate investment standpoint, even though, you're buying what they say at the top of the market, but we're not building any more of those houses as of right now. No one's really come up with a way to, make a margin on it for the builders for those houses under $250,000 that are out there. So, they're not making any more of them. It's simple supply and demand, unless if we see some extravagant, event or something like that, that's really going to, do anything to the housing market. You're still, historically, 3 to 5% appreciation. But as you take a look at it, it's something that, it is something seriously to take a look at. If you haven't thought about it, it is just a different vehicle, and then you can use yourself as a lender, because you can pull that equity out up to 75%. Correct me if I'm wrong. That's more Russ's expertise on the lending side, but you can pull out 75%. So if you got a $100,000 house, if you own it free and clear, you can pull out $75,000, go buy another rental property, and just keep kind of snowballing. And then your tenant is paying your equity back into that house that you just pulled out of, and you're basically you're the bank, rather than taking a savings account, exchanging your time for somebody else's money, taking that money, putting it into a bank. What's that bank doing? They're giving you next to nothing on the thing. They're taking your cash and going out and loaning that out, getting interest back so they can make more money. Well, that's the same thing you're doing when you're buying real estate, is one vehicle that you can use. So it's a different way of looking at it. And obviously, we say a vehicle, how many, a family has, 2 vehicles, potentially 3 vehicles, potentially, and they're all going to go different directions and have different speeds, and so when you look at that, it is something that maybe you got your stock market as a vehicle, your bonds, your mutual funds, and then you have real estate as one, and maybe you have an emergency fund that isn't a bank, and that's perfectly, fine. It's whatever your tolerance and whatever your comfortability level is going through that process. So it's just something to kind of take a look at, how can we help you, be a real estate advisor for you rather than just being an agent. That's what I look at. There are tons of real estate agents out there. How many advisors are there that are going to look out for your best interest? And, I've had clients that, hey, why are you selling your house? Keep it as a rental. And they go to me, well, don't you make money when you, a commission when you sell my house? Well, yeah, but if I can help you grow your net wealth and that aspect of it, I want to be a real estate agent for life, and an advisor, among that process. And, and that's just it's surrounding yourself with people that are going to help you, get to that next level. So, but yeah, I guess I kind of went off on a tangent there, but that's, I'm excited about the real estate market. I think it's a great opportunity to, diversify, from those 401ks and the Roths and the stuff. And obviously everyone has its pros and everyone has its cons. Same thing with real estate, so, but if we can help you out in the future, or today, give me a holler, 402-672-7670. And then Russ at 402-290-8936. And I know he talked about, when I was looking at investment properties, you can do as little as 15% down too. So you don't have to have, that's, your mortgage payment's going to be a little higher. So your cash flow is going to be different, but you're going to be building that appreciation just to get your foot in the door, and you can put more down. And, as you move forward and as that appreciates, you use yourself as a bank, so there are ways to get into the real estate investment business without having a whole lot of cash up front, to do that, which typically most people 25-30%, for a loan if you're going in that route. So, but yeah.
Good stuff. Thanks, Mark.
Yeah. Do you have any other topics or any other things you wanted to touch on?
I think that's it for this week. Anybody has any questions, please feel free to reach out. We're happy to help.
Yep. As always, have a great rest of the week. Enjoy the weekend. And this weekend's my daughter's 4th birthday, so we're gonna have a little fun with that. But as always, have a great week, and we will see you next week. And stay warm out there and take care. And Russ, thank you again for joining us. And we'll catch you next week, everybody.